And in our top business story, economic data for March has signaled a sharp involvement in business conditions across Dubai's private sector economy, with output, new orders, employment and stocks of purchases all expanding at a faster pace than in the preceding month. This was highlighted by a rise in the seasonally adjusted Emirates NBD Dubai Economy Tracker Index, which is a composite indicator designed to give an accurate overview of operating conditions in the non-oil private sector economy. For March, the index registered 56.6, up from 56.2 in February. A reading of below 50 indicates that the non-oil private sector economy is generally declining, while above 50 is a result of the expanding economy. The latest reading was indicative of the second sharpest upturn in business conditions over 2 years. As a result, the average for the first quarter was 56.7, the sharpest since Q1 2015. The best performing subsector monitored by the survey was wholesale and retail at 57.1, followed by travel and tourism at 55.3, and construction at 54.8. The survey covers the Dubai's non-oil private sector economy with additional sector data published for travel and tourism, wholesale and retail and construction. According to the report's authors, March data highlights that Dubai's private sector gained momentum, showing the sharpest rise in new orders in 25 months and a renewed increase in employment. Dubai has become the first international location to trade Shanghai Gold Future Contracts with the launch of a new contract called DGCX Shanghai Gold Futures in collaboration with Dubai Gold and Commodities Exchange. During a media briefing, the Dubai Gold and Commodities Exchange announced that they plan to start trading in yuan-denominated gold futures, which will open up access to the world's largest bullion market in China for the first time, which was previously restricted for foreign participation. The world's largest bullion market, according to officials, is connected to over 10 million institutional customers, 8.3 million individual customers, and 55 certified gold vaults. The DGCX Shanghai Gold Futures contract will be settled with prices derived from the Shanghai Gold Exchange, and the contract will be for a 1,000 grams gold bullion bar with the contract price quoted in CNH per gram. According to officials, the listings of Shanghai Gold Futures on DGCX, which was a wide international footprint and well-established local clearing capabilities for precious metals in the Middle East, bodes well for the UAE, particularly Dubai, which is a strategic gold trading hub and a key point in the Belt and Road Initiative. While talking about their diverse product portfolio, DGCX officials stressed that the addition of DSGC contract will greatly enhance their precious metals offering and allow investors to trade on a single platform with significant margin efficiencies. The launch of the yuan-denominated contract marks the first ever usage of the Shanghai Gold benchmark price in international markets.
This is the first time any exchange in the world, it has got the approval from one of the Chinese exchanges to use the benchmark prices, which is established in China, to be used outside China. So that's a very, very big step which Chinese government has taken, I mean, in the sense that Shanghai Gold Exchange has taken. And in terms of how it will impact, how it positively impact Dubai, DGCX, etc., is if you look at the existing base which Chinese government has created with respect to UAE. China is the second largest trading partner of UAE. There is already a base established. A lot of Chinese banks are here. Bank of China, ICBC, Agriculture Bank of China, etc. They already have bases here. They are already financing businesses here. So this is a next logical step. So as this product gets launched, it gets more liquidity. There'll be more use of the Chinese currency in UAE, and it may pave more way for more use of Chinese currency in the international and bilateral trade as well between the two countries, as well as otherwise as well.
The aim of this collaboration, from our perspective and from the SGE perspective, is SGE is using this as an opportunity to market this benchmark for price discovery. Yeah, for us, we would like to actually take this opportunity to further enhance the gold bullion market here in the United Arab Emirates, because the City of Gold is in Dubai. We have to use this opportunity to expand further what we have and what we can do for the community here.
The new DGCX Shanghai Gold Futures contract was announced at the sidelines of the 6th Dubai Precious Metals Conference being held under the theme of Connecting Markets, the New Era of Global Trade. The two-day conference will explore the industry's most pertinent topics, with discussions focusing on how shifting geopolitics will impact the trade flows of precious metals. Other topics including the importance of branding in the global precious metals industry, application of the global standard in gold, implications of taxation for gold in global hubs.
I think the gold price volatility could deter people from buying physical, but also just the uncertainty not only in Dubai but just in the wider region, because Dubai is so instrumental, so pivotal in terms of supplying gold across the Middle East. And you have so many challenges. You think of Turkey, you think of Egypt, to name but two, and we know when they're struggling, it tends to have a sort of a knock-on effect on Dubai. Plus in Dubai itself, we've had the introduction of the import duty. Next year we could have VAT, and how that's going to be introduced is still up to debate. So there are some challenges that Dubai is facing.
Continued weakness in the Abu Dhabi economy is forcing more property investors to become accidental landlords, as they are unable to sell units that are nearing completion at a profit. According to a new report by property consultancy Clutton's, these investors' willingness to offer more flexible terms to potential tenants to secure income is also placing pressure on rents in an already weak market. The property company's Spring Abu Dhabi property market outlook showed that capital values in investment areas dropped by 1.9% in the first quarter of this year, meaning the year-on-year decline in values was 7.6% compared with a 6% year-on-year decline recorded at the end of 2016. Clutton said that weak economic conditions, rising inflation and high costs of living are curbing demand in residential and commercial markets, with the steepest declines in the luxury market. It said that for landlords who had purchased off-plan homes that are now being completed in developments at places such as Reem Island, the inability to achieve desired sales price is prompting vendors to enter the rental market to generate cash flows. Average rents are now 15% lower year-on-year. Supply in submarkets such as Reem Island is also predicted to increase, leading to further anticipated falls in rents and prices. Clutton's is predicting that average rents will end this year between 5% and 7% lower than 2016, while capital values will fall by 8 to 10%. The value of many of UAE's bank brands increased substantially in 2016, but airline brand values ran into headwinds as a result of worsening revenue forecasts, according to the consultancy Brand Finance. In the brand valuation specialist's annual Middle East 50 report, Emirates was deposed from its top spot for the first time since the ranking began in 2010. Its brand was valued at $6.08 billion, placing it second behind Saudi Arabian telecoms operator STC, whose brand was valued at $6.22 billion. Qatar Airways was the company within the ranking which experienced the steepest decline in brand value, dropping by 38% to almost $2.17 billion. According to Andrew Campbell, the managing director of Brand Finance Middle East, the decline in brand values at both airlines was a result of the macroeconomic climate rather than the inherent strength of the brands. Qatar Airways dropped to 11th in the rankings from 4th place last year, and Etihad Airways slipped 2 places to 20th with a brand value of $1.56 billion. The biggest climbers in the rankings were mainly banks, with Dubai Islamic Bank's brand value increased by 136% to $1.88 billion, moving it up 9 places to 17th. Abu Dhabi Commercial Bank's value increased by 77% to $2.1 billion, moving it up to 10 places to 10th overall. The report's author stated that while the UAE's banks generally did well, the same can't be said for the Saudi banks, who have been hit by declining government deposits and other factors. As a result, National Commercial Bank dropped 7 places to 15th as its brand value fell by 12% to $1.97 billion, while Samba Financial fell 3 places to 25th as its brand declined in value by 24% to $841 million.